All right. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Got another special episode for you today where you get to listen to yet another trader. I don't know. I guess I'm on a streak with these. I might bring on one more later on this week. And I hope everyone enjoyed the show with Willie Woo just a couple of days ago. All right. Well, without any further ado, I'm going to actually pull up his Twitter handle. And then we're gonna go to screen share. There it is. All right. So here we go. Let's welcome filbfilb to the show. Hey man, how you doing today?
Hey Tone, good, thanks. Thanks for having me on again. It's been a while.
Yeah, it has been a while. I think the last time I was in California when we did this show, a little bit different this time. Here is filbfilb's Twitter handle, and you've been at it for a while because I remember when I got Tradingview, which would have been like 2014 or something. I was probably one of the first people to start using Tradingview for like TA because before that everyone was using like what was that one? I forgot the names of them. They were so like not didn't have too many tools. And you were already on there, posting. So you've been at this for quite a while. Give us a little bit of your background since it's been a while since you've been on a show. When did you start trading, and when did you start, publishing your, trade ideas on TradingView? Because I know it must have been 2014 or 15.
Well, actually, I started trading. Well, I got really into trading when I was working for a commodity miner and trader of the physical stuff back in like 2013. I'd done a previous background in finance prior to that, but that's when I started trading myself. And around that sort of time, Bitcoin was obviously doing the 2013 thing, and I really wanted to get into it. But it really took until just after the halving, or just slightly before the halving, sorry, in 2016 before I actually ended up getting into crypto. And actually, I didn't really start posting on TradingView until then. And yeah, I mean, it was quite obvious to me that there was some cyclical stuff going on there. And, cost of operations of mining from the physical world played obviously part of my thought process in the cyclical stuff with Bitcoin. So yeah, I've been around since 2016, basically trying to work out what's going on here, and now full time. I've been for some time trading, analyzing, developing algorithms, and all that sort of stuff.
All right, very, very cool. Okay, and you do have a website. We can talk about that towards the end. You can see the Twitter handle right there, Decent Trader, and there is a link in the video description for filbfilb's website. All right, so real quick, we're gonna stick with the usual format. Uh, excuse me, guys. Stick with the usual format. I'm gonna take 5 minutes. I'm gonna give you guys an overview of what I think of the charts. Then we're gonna get filbfilb to, do his thing, and just pause for questions from me, and I will keep an eye on the audience. So here's my view on the current situation. Nothing has really changed from the prior several weeks, which is another reason for me to keep it very, very quick. I've recently changed the moving averages that I'm displaying. I'm back to displaying the 7-period moving average because I think it has done a very good job as a short-term indicator. And you guys can see that we are stuck below the 7-period moving average, which is we stuck here for a little bit longer. We're going to start to decline fairly quickly as the price declines. We are consolidating near the bottom, and to me, this is a general bearish sign. The MRI is also leaning bearish, but has not indicated a short trade yet, the way it did up here with the red star. The 20-period moving average has now started declining. You are being supported by the 50-period moving average, and that is not. I mean, it's great for now, but I don't think it'll support it again. So if we fall back down to 32,000, I am expecting us to most likely break and swing to a new low. I've also said very, very recently that I don't see any support between the current prices if we drop below 30K and all the way down to 20K. What I have not taken into account is any Fibonacci retracements. And the next guest on here might be Fiboswani, who mostly charts with Fibonacci's. I will quickly throw it on here for my own sanity, just to see where there could be a good Fibonacci support. And see, to me, the 50% is not a good Fibonacci support. And I always feel like the 50-period Fibonacci is a level to be broken. And therefore, I have found a single element between the $20,000 area and the all-time high in that 26.9 or basically $27,000 area, which is the 62% Fibonacci line, and we can pierce that a little bit as long as we don't actually close below it. All right, so good thing I took a look at that because I have not seen that before. So we have been bouncing on a daily chart into the moving average. I was not all that bullish on this swing. I was waiting for a clean break of the $37,000 area before considering the bottom to be in. That did not happen, so therefore I cannot assume with a greater percent certainty that the bottom is in, and therefore I remain in a wait and see mode, waiting to buy that perfect dip below the $28,000 area, or just be comfortable going long above the $37,000, $38,000 area. In addition, going back to the weekly chart, while this consolidation to me remains bearish leaning, if this consolidation lasts another 6 to 8 weeks, I will then consider this consolidation bullish leaning. So consolidations at the bottom are bearish unless they've lasted long enough, and the definition of long enough is, of course, subjective, to say the least. Short-term chart, 1 hour. I don't see anything interesting here to comment on, because I don't want to waste any time. 4 hour, I also don't see anything interesting here to comment on. The stock market has not yet started trading, but I will quickly glance at oil. I remain pretty bullish on oil, especially with crazy things happening with the oceans burning. I remain bullish on gold. I'm still hopeful gold hits a new all-time high this year, just like Bitcoin. I expect it to. And the S&P 500, I am looking for a top. The S&P 500 topped on a daily scale on Friday. It is consolidating, and consolidations at the top are bullish. To me, however, the daily MRI top with I think there is the weekly is not coming yet, but I'm still concerned about that daily MRI top. All right, on this note, I will go ahead and leave it here. I'm gonna come off screen share, and I'm gonna hand it off to Flip, and go ahead and floor is yours. You can talk about short-term analysis, long-term analysis. I'll think of questions as we go along, so just maybe pause for questions before you move on to another topic or a different chart.
Sure, thanks. I think you need to let me share.
Oh yeah, my bad. There you go. You're all good now.
All right. Can you see this? Can you see the chart?
Yes, I can.
Okay, good stuff. Right. This chart is the same chart that I looked at with you last time I was on the show. And as a reminder, we were just about to break out of 12K. And,
I hope we were both bullish back then.
I can tell you exactly what happened. Exactly. We were almost excitably bullish at the time.
Awesome.
And our conclusion actually at the time, in short, was that we were going to go on a big tearing run to the upside. We thought that we might have a little bit of a correction around 14 to 16K, which did ultimately come. And then, believe it or not, we also seemed to think that we would go to about 60K. And then top out potentially, and that's where we were kind of thinking the cycle could potentially top. And we're not making this up. I'm not making this up. You can go back and watch the video yourself. And the reason why we came to that sort of conclusion around that time was that we weren't really too sure that the market would have the liquidity to support the price. And that's kind of going to be a little bit of the theme as we go through. But I just thought it was interesting to note that we're kind of back in a similar situation. One of the reasons why it was interesting actually at the time was we were right at the apex of this the reaccumulation after the previous market top, and we're just about to break out again. And interestingly, around the same sort of time, it was like exactly the same within the cycle. We're within exactly the same sort of time period as to where that should occur. And interestingly, again, if you put on the this isn't planned at all, but if you go and pull the previous cycle over the top, we're kind of exactly where we were last time. So we're having the same sort of conversation with the price being exactly at the same sort of place as it was within the cycle as this time. So it's quite fitting that we're having the discussion again now, actually.
Yeah, no, that's great. I'm actually looking for those old videos, and I'm putting the links to them in the video description. So that's pretty cool.
Definitely share the ones where we get it right. So
Yeah.
so ultimately, in short, the price is where it should be for where we are in the cycle, give or take, which is absolutely fine. I mean, obviously, they've got this shadow over the top of the previous cycle. You can see that ultimately we ran away way too fast versus the previous cycle, which was more of a progressive parabolic move, whereas this was just like a ridiculously aggressive move to the upside. And actually, the more you look at it, it looks more like the deviation versus the previous cycle that we had in 2019, which was like the one plus or one token scam or whatever it was, which helped perpetuate that. So we ran ahead of schedule versus previous cycles, and with that comes some problems, which I think some of which have been borne out. So fundamentally, we kind of are where we should be, is kind of my high level narrative. Other interesting things to note, we broke out and we came back, and we've rested back on the 1.618 of the previous bull market. The bear market from bottom to top. The extension of the 1.618 is where we're now currently resting, which is actually the same place that we were resting roughly in the previous cycle around here. So it's quite an important level, cyclically, in terms of time, everything, kind of suggests make or break. Either something's going to break versus the previous cycle here, or we're going to see something similar to what we've seen in previous cycles, which is continuation. One thing that's also interesting is that we've kind of got this inefficiency within price. There's inefficiencies within here. Some of it is a little bit more efficient than other parts. But ultimately, we haven't come back and retested the breakout. I seem to remember around the same sort of time you had the same sort of problem with us not coming back and retesting the highs around 1300, 1400 or something. So like the whole thing.
Yeah, that really bothered me, by the way. When we broke out back then in 2017 above the $1,200 top and went all the way to 3, and then only pulled back to 1,800, all the way to 3,000, and then only pulled back to 1,800. That really bothered me that we never properly back tested 1,300. But with enough time and having and closer to the next halving and a halving in between, I'm now more at peace with Bitcoin markets only falling to a level that is 100% higher than the prior swing high if enough time has passed between.
Yeah, I agree. And I have a similar view on, when people talk about gap theory and things like that. I think generally the market will tend to oscillate back to where there are gaps in either efficiencies or literally on the chart. But over time, they become less relevant for various reasons, including the halving, obviously. I think that is actually a pretty good narrative as to why. But, one of my personal views at the time was these massive bullish engulfing candles on the way up suggested that there was always more demand around these levels than there would be supply. But, as we've seen with Bitcoin, anything can happen. So that's the overall view as to where we are. Now, On our site, we've got some on-chain
Hey,
analytics.
sorry. Phil, if you go back to that chart real quick. So TradingView has their own built-in index, which has a lot more stable prices, especially in its history. So you don't get those crazy wicks. And the price history goes back to like 2010. So it's yeah, no, not the BLX. The BLX is from Brave New Coin. Like TradingView itself has its own index. So if you just type BTC USD and look for index composed by TradingView, it updates in real time as well. No, you're scrolling way too far down. Go up, all the way up, all the way up. It comes up on the first page somewhere. Yeah, this index, that one. Yeah.
Okay.
So I know you're going to lose all your annotations, but it does go all the way back to 2010, and it doesn't have those crazy wicks that you saw on Bitfinex.
Nice. Learn something new
and
today,
it updates in real time, and you can use it on all time scales.
That's awesome. That is actually really cool, because if you try and do things like logarithmic trends, it doesn't work properly unless you have all of this data. So that's really cool to have it on lower time frames as well.
So just a heads up before I forget to tell you, this is what I use now for all my charts. I know I had to move all my annotations, but it was worth it.
What's the volume like on it?
I mean, it's an index, right? So it just uses volume from all the exchanges.
Okay. I mean, we know that it was all garbage volume back then anyway, didn't we? So
it
doesn't help too much. Yeah. Okay. So on our site, we've got some on-chain analytics stuff, which is very important to us to try and understand. Mostly important for me, actually, is the mentality of the people who are holding the coins, and that's going to be the theme that I go through here. So in our current cycle, effectively what this is the 1 year hodl wave chart, or hodl, however you want to call it. What it does is it tells you the proportion or the percentage of coins that are being held for more than 1 year, and that's obviously dictates whether you're a holder or a short-term speculator. And what it's telling us at the minute is about 53% of the market is holding for greater than 1 year. Now, if you think about that in terms of price, that means that pretty much most of the people who are holding, or who this represents, is people below, or certainly below 20k, and the vast majority will below 10k as well. So a lot of these guys are miles in profit, well, at least 3x, probably more like 10. So a lot of the people in the market aren't really under that much pressure to sell at the moment. Interestingly, around the same sort of time, in the previous cycle, we were at about 55%, let's say. So what we know is that, and also having said that, the price was, around about 2,000-3,000. So we were 2x the previous all-time high, somewhere thereabouts, maybe it's a little bit less, which is sort of where we are now, sort of between 30 and 40k. So the mentality of the people who've been holding and accumulating through the whole of the bear market is going to be exactly the same as it was in the previous cycle. We've had, yes, a deviation versus the previous cycle, and we've gone higher, but, do they really care if they're accumulating for a longer period of time? Possibly not. So that is telling me that we have a margin of safety from people giving up or capitulating from long-term holders. You can see they're only really interested in selling higher. We've never really tested what happens if it gets back to below 10k or 20k, that kind of thing. So we don't really know how they would behave. But as it currently stands, they're not interested in selling. That's what we know. Or they're unlikely to be anyway. So this is the R-hodl waves. So it's another way of looking at it, but kind of breaking it out by time frame of the time that people have been holding, as opposed to just greater than 1 year. It kind of gets a little bit more into the detail. And what you can see here is that we've got the this particular outline here is people who've been holding between 1 and 3 months. So you might describe these guys as being short-term speculators in the market, or new entrants, new participants. And you can see that the proportion of people who were holding those coins was comparable to some of the stuff we saw on the way up in 2017, particularly at the top. It's almost exactly the same in 2019. Going to ignore that one. But then, previous spikes, same sort of speculators holding roughly the same sort of coins. And what we saw in each of these market tops, because I believe that the 2019 top was a miniature top, a miniature cycle top, is that it topped out about this level, and then they completely gave up on the market, which is fundamentally what you're seeing here. So we saw it at the 2017 top, saw it 2019 top, and then you have to go back to sort of 2014. So that's telling me that the short-term speculators got totally annihilated in the market, which is different to the previous cycle. So in the previous cycle, if obviously, as you know, we were just bouncing off the 20-week moving average all the way up, and people just kept entering the market, particularly retail, all the way through to the upside. Whereas this time we have got a difference, and that, if you think about it, makes sense. We went over and above expectation. We saw this distribution at the top, and then those guys all got eliminated and taken out of the market. So what I think is reasonable potentially to think here is that we're seeing like a small cycle, or we're seeing a cycle within potentially the cycle, or we've topped. There's not really anything in between, as far as I'm concerned. So it's just interesting to see how people have actually behaved and who's involved in moving the price around. So along with that this is the balances of Bitcoins, which are greater than 1,000 Bitcoins. So obviously these guys are whales. And you can see that the green line here is the number of wallets with greater than 1,000 coins. They've just been trending all the way up. Not so much actually between sort of 6 and 10k, particularly above 10k, and a lot below. So between 6 and 10k, people actually, well, between 3 and 6k, lots of interest. So obviously this ticked up a lot as we went towards the distribution phase, and you can see almost like right at the top, as soon as distribution here started, I'm going to get on to WYCKOFF separately, as soon as distribution started, like the 1,000 coins, they were the guys who've distributed and dumped on everyone. And I think what's probably important to note here is that these guys are all still in profit as well. So they are making up part of the the one year chart here. So they are still deep in profit, a lot of these guys. However, they will be looking to obviously take profit. And we've come down below that 20-week moving average. So the mentality in the cycles, kind of, people don't really know where they are. We've lost the speculators a little bit too early in the cycle, which might be problematic later on. And we've come down a little bit too far. But we went up too fast. So people are very confused, understandably, as to what is actually going on. But I think one important point to note here is that these wallets really took an interest around about the end of the year, around sort of December, late December, going into 2021. And the price there was, we know it was in between sort of 18 and 20k. And then in particular, we saw a big spike really start at about 25k. So we know that people were interested in entering the market around those sorts of prices. And we know that those participants were happy or some participants of bigger size were happy to distribute between 50 and 60k. So those are other things that we also know. So the MVRV Z score as well kind of shows you in simple terms. So the orange line here is realized cap. So it's the effective market price of the unmoved Bitcoins. So when they were last moved, you multiply that by the price, top it all up, and you get your kind of baseline realized cap where everyone's either in profit or everyone's underwater on a consolidated level. And again, you can see that this is kind of at about 300 odd billion at the minute, 350, 360 billion, having the price come back down quite a lot. So the MVRV Z score basically tells you like how much in profit is everyone. And at cycle tops, you tend to see it, spike right up into this high zone up here, and then you get a big sell-off, possibly a blow off top, which results in a reset. And we nearly got there. We didn't quite get there, nearly did, and we're sort of coming back down now. So that's telling us that what we've kind of just been through, which is that a lot of people are still in profit, but it's not a silly level like it was at previously. So we've washed out that speculation, which is good to see. So the question is, are we reaccumulating here, or are we redistributing and we're going to go lower? And I know that's the same question that everyone's got. Now, I'm going to go through, well, I'll quickly go through just WYCKOFF, just generally. I mean, it's pretty straightforward. This just looks exactly like the Bitcoin chart that we've just looked at, right? We've had this consolidation period. We sold off, and then the debate now is, are we kind of redistributing here and we're going to go lower, or are we doing an accumulation phase? There's two different schematics here. Some people get in touch with me and tell me that I did mine wrong. I just did the different one to you. But there are actually two different schematics here, which I'll have a quick look at in a moment.
You're giving me more. You're giving me more ammo now as to why I'm not a fan of the WYCKOFF distribution. But go on. I'm really curious.
You're going to say it's like Elliott waves, right? And to some extent, it is.
Yeah.
And that is absolutely right. You can't say that it was the schematic until it was. It's the same as Elliott waves, right? So I think it's something good to be aware of, obviously, particularly like towards the end of it forming. And this is the tweet that I was really trying to share, which was everybody's been trying to do this WYCKOFF accumulation since right in here. So everyone, what they do is they've learned about WYCKOFF accumulation up here, and then they start trying to apply it to every time frame, like 1 hour time frames and everything. And realistically, to me, it makes sense that if you've got a really big drawdown like this and a long distribution phase, the odds of you reversing here, it should have already happened. Like in the previous cycle, you just bounce straight out. They find there's way too much demand, and you go back up. I mean, let's quickly go back to WYCKOFF. It's right at the top. Here you get demand greater than supply is what happens in the accumulation area. On the way up, it's supply greater than demand, and you mark down. I mean, again, it looks a little bit like the Bitcoin chart at the moment. So yeah, the thing that was bothering me is that everyone's trying to do it a little bit too quick, and the result of that is that you get chopped up when you're trading, because you get fear of missing out, that it is accumulation, you don't want to be left behind, and by definition, you then start getting chopped up because this price action's designed to shake people out and to make people unsure about what's going on, confuse the market. That's why you get these liquidity runs below the wicks that then end up ending higher. It's to draw that liquidity in and confuse the market as to what's going on. So I think just people have been looking at it maybe perhaps a little bit like it needs to all happen all at once. And as a result, people are getting chopped up. So I'm a little bit wary about the speed of the recovery, particularly given the drawdown. Is quite an important thing to me at the moment. So if we just, going back into the chart, and let's have a look at the daily. I'm going to kind of present like a bullish and bearish case as I go, and we'll try and work it out, what's going on, or what's going to help us to understand whether or not we are going up or down. So fundamentally, this is trending down. These are daily closes. We had a bit of a deviation here and the thing's trending down. We do have an element of sideways going on in the market here. But one of the issues at the minute in particular is that we've got this point of control, which is effectively within just this little area here, how much price action's taken place at which price. So I'll zoom in and just show it actually. Okay, so it's changed slightly, but anyway, let's call it here. So the main issue that we've got is that the point of control within this range is telling us that the bears are in control, because the bulls just can't get over this about 35 to 36.5k. They just kind of make it into support. And the trend is down. I mean, you can see like it's getting rejected all the time. This was basically Sailor buying, and then that Finex guy kind of helped take us back down. But then we had, more trend hitting the top of the trend. And we're kind of like at the bottom of that now, where we're at a decision point. And if this is WYCKOFF, I believe we need to see more strength at this point. You know, like we should be attacking this 36 level pretty damn quick. Needs to happen soon. And then that needs to start to be supported, and the market needs to try and take us up. I mean, on a sort of textbook WYCKOFF, or the way that I drew it anyway, it would imply that we should, make our way back up to the top of the range. I mean, if we start trading down here, like you were saying, that's just going to look so weak. It's in neither schematic of WYCKOFF should that happen, really. The next thing that should happen is that we should push towards the top of the range, as I say, rather than push down. So I think it's at an extremely pinnacle point. There's a couple of other reasons why, which is here we can see that RSI has been trending down basically since the top. I know Willie shared this, but it's something I've been tracking as well. So RSI has just been putting in lower highs all the way through, and there was this divergence, up here with price continuing higher and divergence, the RSI going lower. What we've got now is we're still in the RSI downtrend, but we've actually got a bullish divergence here. So the bulls are definitely here now. What we've also got in here is these are the Finex longs in the market. Now these have been increasing from, just to give you an idea, it's gone from 15,000 Bitcoin long up to 50,000 Bitcoin long. And in that time, okay, we've had spikes of some sellers turning up, but this thing's geared highly to the upside. So we know that there are people definitely trying to buy Bitcoin around 30, and they've been going at this pretty much straight up accumulating ever since like where we are now. The same sort of range. So there's someone or some people who are just buying irrespective of what's going on the spot market. So that's quite interesting. Again, it kind of says like, are we at that pinch point where if we fell a lot lower, is that going to pull these guys up a little bit? So, when we look at things like the funding rate, which I know is a popular thing that you like to look at as well. I can't get it there. We are negative here, and that is typically a good sign that we're going to at least squeeze to the upside. But, we need to be aware that we do also have quite a heavily geared market to the long side as well. So, yes, there's a chance we're going to squeeze up, but also there's still a lot of people who are long with leverage behind the scenes in various different ways. There's different ways you can get leverage here, right? There's kind of, you can take on debt, or you can, go to the derivatives market or what have you. But definitely still leverage in this market. We do have a bullish RSI, but the volume here, when we drop below 30k, it was less than impressive. It should have been a big volume spike, that one. And it wasn't really the case. So it kind of shows a bit of weakness. So there's definitely weakness going on here. And as I say, I think the good thing about it is that we're coming to the end of it now. And I think we're going to know pretty soon what's going to happen. We should be able to get up here if we're bullish. That's what I'm expecting to happen. If we just grind sort of down sideways through here, to me, that's going to roll over sooner rather than later. So it's at that pinch point now. So it's definitely time to pay attention. And there are other things that are bullish. I mean, this is my volume tool, which looks at like volume momentum. And you can see that it's clearly got bullish divergence within that as well. And generally it's trending to the upside. it's not really confirmed as bullish until we cross the zero line. So this is just generally looking at volume momentum, but it's kind of saying there is volume signature there to suggest that things are good, and there is definitely someone trying to accumulate. Lots of people are trying to accumulate, particularly people who sold at the top. But fundamentally, we haven't seen that big increase in the 1,000 Bitcoin wallets around this sort of level. So there is sort of a bit of a divergence going on. So we've lost the speculators, and I think we've lost them not too early in the cycle. The problem with that is how are you gonna get anybody back in when they've just witnessed this big drawdown? And so many of them kind of got in this, and then they've all capitulated. So I wouldn't really expect those guys to come back, and that's not really happened before. So we are sort of we kind of need to reestablish our demand. Is my thought. And I mean, I don't need to tell you that other things on this chart, we hit 1 trillion, right? And hitting 1 trillion was obviously a massive thing for Bitcoin and crypto generally. But we also had the Coinbase IPO, and we also had all of these new people come in, and this was all around the Coinbase IPO. Now, I don't want to be too much of a conspiracy theorist, but at the time I was saying that there's no way that they're going to let this thing dump while we've got the IPO going on, because there's just too many people in the market who are going to want this thing who are incentivized for this thing to stay high. All the exchanges are, that valuation pegs everything.
But then Elon and Musk and a lot of bad waves came in to just hit Bitcoin.
Yeah, I mean, there's how you can have the Pope and Arnold Schwarzenegger talking. I mean, we had the Pope and Elon Schwarzenegger. Yeah. Arnold Schwarzenegger talking about Bitcoin and how bad it was for the environment. Elon's talking about how bad it is. China's coming in. It was almost like laughable that how quickly it was all coming in. And we still have some of that going on today.
It was almost like shit. It's going up too fast. We don't want to spend that much money accumulating it. Let's chop it down a bit.
Yeah, exactly. I mean, well, there's a lot of conspiracy about Elon, whether or not he wanted, the carbon credits, or he got a bit of a nudge from someone at Tesla saying, look, it's a bit, not good for the environment. But I don't know. I don't really listen to Elon Musk at all. I think he's shown himself for what he is, and I don't think he's a particularly honest individual.
Oh yeah, no, I think he really ruined his reputation, at least with the future wave of multi-billionaires.
I certainly hope that to be the case. But yeah, I mean, we got this sell-off, and was it? I guess there's two sorts of ways you can look at it, right? Either someone somewhere in the system decided that crypto above 1 trillion is not good for the central banks and stuff. It's getting too much attention. Too many people are getting bought into it. And yeah, we've got our own agenda, and that is to have our own digital currencies. So we cannot have Bitcoin taking all of this away from our traditional finance and banking systems, which we like to control. And so there's that, let's try and kill it, or there's let's try and knock the price down and accumulate it for ourselves. And I think it remains to be seen which it is, because when Bitcoin was way, way lower cap, it just wasn't really on the radar. Yeah, okay, it had a bit of bad press about, terrorism financing and washing of money and all this sort of stuff. But at 1 trillion, it became, this is a bit of a game changer here. And I think that so it feels to me like someone said, put the brakes on this thing. And lo and behold, we had one of the worst sell-offs I think we've ever had, particularly in the cycle anyway. So yeah, I don't know whether or not it's a conspiracy to try and accumulate Bitcoin, or whether it's just to try and kill the thing. And I think that might actually be what determines what happens next overall, because yeah, we know that people are trying to accumulate it, and I believe that also people are trying to distribute it as well. Against the accumulation argument, I suppose, or partly for it actually, let's just try and be neutral here, is around this 30k level, you can see that a lot of this is the Stablecoin Market Cup. So this is the total volume of stable coins in the system, and around about the 30k level, there was a big uptick. So there was quite a lot of demand there, and again, there was a lot of demand when price came back to 30k. So since then, though, I mean, there's a MACD on this green line. You can see that we haven't really seen any momentum of new money coming into the system. So those coins, yes. I mean, the answer is, are people trying to reaccumulate Bitcoin here? The answer is yes. I believe that to be the case. The evidence is there. However, I do also believe that people are trying to push the price down, who are incentivized because Bitcoin is a threat to their system as well. And there's just too much evidence for that, for that not to be the case. So that's another one on here. So this is Crypto Quant. They do some on-chain
hey,
stuff.
Phil, sorry. Can you just go back to that chart, the stablecoin chart?
Sure.
Since you mentioned, threats to the system, what are your views on Tether? And it is a dangerous question for me to ask you of your views on Twitter on Tether, because the Tether people hate me to a danger, like with a passion. Like I am literally in the court filings, in emails by Tether, by people of, I think the lawyer of Tether like referred to me as a colossal douche in like emails that are part of the court filings. Former heads of Tether have literally said "fuck you" to my face in person, while at the same time, people like Bitfinex also think I am a total Tether shill and a Tether defender. So I don't know how it's possible for me to be so hated by both sides of the Tether debate. So without you falling into this boat, what are your views on Tether?
Well, what people expect Tether to be is a bank account with money in it that equals what's on chain, right? And it isn't. What it is a basket of goods which reflect the value, or which peg the value of the currency to what it should be, which is $1. Now, I know that might upset a lot of people, but that is also how the banking system works. So that's how banks operate. You put money into the bank, and then that money will get used elsewhere and to be invested. Perhaps it might get recycled and go into mortgages and so on. So this isn't like, and I know there has been some inter-company loans and stuff that went on, and frankly, there comes a point where like I just can't be bothered to look into it any further. But generally speaking, the answer to like, do I have confidence in Tether is, well, I've got enough USDT in my net wealth to answer the question right now, which is it must be yes. So I personally don't have a problem particularly with Tether, in the same way that, I don't particularly have a problem with USDC. I think overall, if the government wanted to come and try and take down, I mean, they've tried to take down Tether, or they've tried to find problems there, and they have been audited, and they've gone through all of the process, and they seem to come out every time okay. So from what I can see is that they keep getting tested, and things seem to be fine when they do get investigated, and also the market tends to price in risk generally. So to me, I'm invested in Tether at the minute while I try and work out what's going on in this market. So my view is that fingers crossed it'll all remain okay, but it is a big honeypot, right? I mean, if they came and pulled the plug on Tether, that could be a big problem for people like Binance and other guys who are exchanges in the network who are also under attack at the moment. So, it's a big honeypot, basically, potentially, where a lot of people in crypto would lose a lot of money if something went wrong. And I don't know how it would actually function if they do bring out Fedcoin. I can't imagine them being particularly fond of, other USDT type coins which reflect the USD rate. So for me, like, I'm not that bothered right now. I'm not really concerned. I'm not losing sleep over them at night, and they seem to be fairly transparent when asked. So, until that changes, I haven't got an issue.
All right. Cool. Good to know. For the record, I have never held, used, nor transferred any Tether, but no one really believes you anyway. It's internet. All right. Sorry. All right. Go on.
So yeah, I mean that's
and the live chat is mad at me again for not calling Tether a scam. And like I said, it's amazing how I'm hated by the Tether haters and by the Tether lovers at the same time.
I think that some people will never be happy unless, like, you know, we only look at like Bitcoin versus, I don't know, other assets, you know, rather than the dollar, which is a scam, or everything's a scam really if it's not Bitcoin. So yeah, that's the stable coins. I mean, reserve wise, looking at how much crypto's on exchange, like you can see this is all of those, you know, all of the accumulation that went on, and Bitcoin coming off the exchanges after reaching the lows. And it is quite good actually looking at the trend on the green line here, which is the trend of the on reserve held on reserve coins, and we can see that there was a very obvious breakout retrospectively here of an uptick in the number of coins on exchange, and that was basically the prelude to the big dump. So it is useful in looking at trends.
Wait a minute. I'm sorry, because like I've done enough shows with Willy Woo where though he seemed to have stopped posting that chart, where he's been talking about how coins have been coming off exchange for quite a while this year. And your chart seems to show a bit of the opposite of that. So what's going on here?
Well, I mean, he might be looking at a slightly different data set, but this is effectively showing that, well, particularly through 2020, it was all coming off exchange. And then we hit 2021 here. We basically went sideways and down.
It's possible. I mean, time flies so fast. It's possible that he hasn't posted that chart since April of this year. And I'm still thinking that coins were continuing to come off exchange. But I'm going to ask him to see if he can bring that chart back in his next newsletter.
Yeah, I mean, I'm looking at Crypto Quanti. I know he likes to use Glassnode, so they may have potentially slightly different data. But I'd be concerned if, you know, someone would have called it out, I think, if it was like materially different somewhere. But yeah, so like this is quite, what we can say is that we are kind of back within just about the range where we were when Bitcoin was, you know, going up still. So we haven't had this big inflow of people about to dump. It's certainly one thing worth bearing in mind. But these coins, like, sort of, I don't know if I can draw on this. Can't find it. Anyway, there's still this number of coins here on exchange versus where we started dumping. So there is still some risk on exchange, and that's probably just people waiting and seeing what's happening, is kind of my thoughts on that. So another thing to note, this is open interest, the trader platform. So aggregated open interest, so it's across everything really. So you can see fundamentally when we were at the top, like the market was up at like 11 billion contracts of futures contracts long, and that just got, you know, absolutely unwound at the tune of down to 3.5 billion. So goodbye and good night to a lot of traders at that point, and a lot of the speculators who, you know, who could just buy every dip and it would just go up. And what we've got here is like open interest going up. It's up from 3.5 to, what's it now, 5. So it's kind of getting towards the levels we were at before we sort of nuked. And what open interest is, like, for those people who don't know, is it's the sum of all of the contracts in the market. So sometimes people say, oh, well, that shows people are going long. Well, what it actually does is it shows both. It's people are going long and short. So people are speculating both ways here. And that lends itself to the fact that the market is winding up. And we probably, I reckon we're getting close enough to having enough in the system to potentially do that big sell-off and send us lower. Having said that, you know, there's also evidence there that people are accumulating. There's some volume recognition there, and also, you know, we still have negative funding on perpetuals. So put the two together, and it might suggest we still have chop to go, to be honest with you, for a few more days. But Sort of in summary, normally in this part of the cycle, we'll have those speculators. They've gone. I don't know how we're going to get them back. It's going to be difficult. Perhaps that was by design. Perhaps it was to get rid of them, to get the institutions in who saw the price running away, recognize the need of the asset, and therefore they pull the train back and they try to accumulate. We have evidence of accumulation going on. We also have evidence of crappy price action occurring as well. So we are about to find out what's going on. If you zoomed out, if you were to show me this chart on its own like this, just as it is now, it looks like a Head and Shoulders, right? I mean, it's hard not to see it. So you would probably think we need to do some more testing of this area. I think that would be the prudent thing. But fundamentally, if it's accumulation, it needs more time. So I wouldn't be surprised if we have got until at least September before we actually start moving to the upside. I don't think this thing's just going to, do this, because if you think about the argument of like some of the corporate balance sheet argument, put your money into the reserves and all this sort of stuff, that sell at a board meeting is going to be really difficult after Bitcoin's lost half of its value. So not only the speculator's gone, but that kind of corporate balance sheet narrative also might have faded a little bit. Plus, we've also got the fact that we've moved further away from COVID. So a lot of this was like, oh, bloody hell, we're in real trouble with the COVID stuff. And now, life's sort of trying to get back to normal. So
I don't know, man. You're in the UK. You guys are going backwards like Canada.
Oh man, just we could do a whole show on that, to be honest with you. But I feel like I've been in jail for the last year or so.
You have been.
Pretty much, yeah, pretty much. I mean, I don't really pay attention to the rules at all. But well, not at all. But yeah, let's not get into that because we'll probably upset some people.
Yeah.
So yeah, it is what it is. I guess money supply. It's parabolic, isn't it? So, Bitcoin's narrative for me and you hasn't really changed. It's as it was. The dollar's showing a little bit of strength at the moment. I don't know what your thoughts are on that, but I just look at this
my thoughts are exactly what your chart shows, that I'm expecting the dollar to like crater. And it's weird as to why it would crater, because like which other currencies are, creating confidence in the world? Like everyone is printing like a drunken sailor, and it's out of control. My only reason, and I was a huge dollar bull, by the way. Before the election, I was a huge dollar bull, the U.S. election, and now I'm a huge dollar bear. And the only reason that I have for being a dollar bear, and I guess El Salvador is my biggest reinforcement of that, is that the U.S. dollar has been this strong for this long, is not because of it is mostly because of their political and economic stability. And I believe the political stability is now gone because of what happened in the election. It's just the election was a clown show. Whether you believe they cheated or not, it doesn't matter. I mean, everyone knows where I stand on that, but it's irrelevant what your opinion is, whether there was or wasn't cheating. It was a clown show. And I believe that many countries that have been using the US dollar and pegged to the US dollar and have confidence in the US dollar are going to lose that confidence. And we're seeing El Salvador as being the first pawn moving in that chess set, because there are way bigger countries than El Salvador treating the dollar like king. And if those countries stop, for example, UAE, where I've spent most of my year this year, they're pegged to the dollar too. Hong Kong, they're pegged to the dollar. Panama, pegged to the dollar. It is the dollar. So there are so many countries that are treating the dollar as king. And if those countries stop treating the dollar as king, that's more, dominoes going against the confidence in the dollar. And I'm not saying any other currency is better, but this is where Bitcoin might shine, and the dollar will drop. Maybe maybe the DXY index, because this is just a made-up index. Maybe that would have to rebalance and put a little bit of Bitcoin and gold in it, and then we'll really see how much this index is dropping.
Right. I mean, my narrative's always exactly the same. You know, like this is really like 65% of this is a euro dollar chart.
Right.
And the euro
And the euro, and ironically, the euro is strengthening, which is baffling to me because I thought that the UK, I know the UK was never on the euro, but like I thought that was, a nice little beginning of the collapse of the euro common currency. And I'm still anticipating a collapse of the euro common currency. But the euro has been appreciating against the dollar, and it's not like Europe did better economically during the COVID 2020 disaster. I mean, most of Europe is still shut down even more than the US. But the difference here is, even though Europe was dumber from an economic perspective during COVID, Europe was more solidified from a political perspective during COVID versus the US becoming this disaster. So I think the appreciation of the euro recently all has to do with politics and not so much economics.
Yeah, I agree. I mean, like, you know, this is like looking at two pieces of shit next to each other and trying to work out which is the better one, you know. Particularly if you're looking at crypto. You know, the thing that I actually look at is the M2 for one, which is the money supply, and then also I'm trying to pay a bit more attention to this commodities index as well, which is really showing that, you know, there's a lot of strength in the commodity market at the moment. I think that's where you're likely to see inflation start to play out. We obviously have seen inflation playing out quite heavily, particularly, you know, with things such as in lumber. And the way that the Fed and all those guys is trying to pass it all off is that it's sort of transitionary. Particularly some of my analyst friends in London think the same, that it's like the effect of pent up demand from all of the people who've not been able to go out and do anything versus like a fixed supply or like a capped supply of things you can do, like go on holiday or go to a restaurant and stuff like that. So there's inflation as a result of that. But, you know, you just have to open your eyes and see. I mean, you know, if you try and get any building work done in the UK, it's just not possible because people have got this spare cash. So the cost of building in the UK has gone up about 30%. And I just don't see that slowing down, particularly when interest rates are particularly low. Debt's very cheap. They keep pumping out the debt to keep the system going. And that's evidently what they had to do during COVID. So, excuse me. The case for being long Bitcoin, sorry, I don't have COVID, by the way. The case for being long Bitcoin has not changed fundamentally, which is obviously a good thing.
Yeah. Hey guys, I got a cool project for someone. If someone wants to look up like the history of the composition of the DXY and why it's that way. I mean, DXY composition has not changed in a long time. It's like 60 something % euro, and I think the next biggest one is it might be the pound or the Japanese yen, and I know the pound's involved, the yen's involved, the Swiss franc is involved, and I think that's about it. If someone wants to look up the original paper as to why those percentages were chosen and why those other fiat currencies were chosen for DXY. And I would love to see like an academic research paper and, you know, using similar metrics, but adding a little bit of Bitcoin and a little bit of gold into that index and making it like fair and balanced, right? Like don't make Bitcoin like 100% of the DXY of the new DXY calculation. Something reasonable, like something even smaller than the Swiss franc contribution, which is like less than 1%. But I think it would be very, very interesting by making a more balanced view of the US dollar. I just think it would be a great project. I don't think I'm going to do it, but I just think it would be awesome.
Yeah, I agree. It'd be quite interesting. I'm not too sure how I would go about doing that. I'd need to give it some thought. But yeah, if someone else can
Oh yeah,
come up
no,
with
this will
something, that'd be
require
cool.
a lot of thought. I mean, I know people are gonna email me this tomorrow, right? I mean, this is I'm talking about like a serious like research thing.
Yep, yep. Well, I'm not going to be the man for the job. I've got far too much to do. But yeah, I guess like so fundamentally things haven't really changed. The dollars, the fiat currency machines, kind of, you know, it's not fit for purpose anymore, and it's basically an experiment at this point. And the only thing that hasn't blown it up really is that the money that they've printed hasn't gone into circulation. It's kind of propping up balance sheets and bad debt elsewhere in the system. So that velocity factor, which is required in modern monetary theory, it's to send inflation higher, just isn't there yet. But let's see what happens, because interest rates, 10-year yields are still on the down, which implies that long-term debt or bonds are still relatively high in demand. So people are still worried about inflation. It hasn't gone away. It's just because I think Bitcoin just went up too much too soon, and it was carried through by all of this positive news, and we've just seen the exact opposite on the way down. It's almost equal and opposite. So I think there's still a strong case for being long Bitcoin, obviously, but on a macro level.
Let's talk some shit coins. I'm liking your chart all the way on the far right.
Yeah, so I mean, I'm gonna again lose some friends here potentially, but this is really just like
Oh come
wanting.
on! If they were if were they really friends?
Some of them are misguided, mate. some, some of them are misguided, but anyway, I mean, I'm not going to sit here and say I don't buy any alts at all. I mean, to be a trader in the space and to not taken part in this altcoin run up.
Yeah, no, but I've always made that distinction. Like you can trade horse manure for all I care. Like
Yeah.
I don't care how you improve the wealth of your family as a trader, but I just find that like anyone that is promoting shitcoins with a logo or in their Twitter handle or is talking about how great it is, like if you're gonna talk about, hey, this shitcoin is giving you a great bullish trading opportunity, that's fine. Like I don't care about that. It's the shilling of how much better they are, because I don't know if that person just doesn't get it and they're stupid, or they do get it and they're just trying to pump their bag. And I'm also not sure which one is worse.
Well, there's also an element of it's like cultism sometimes. I mean, we're all in Bitcoin, so to some extent, we're all in a big cult as well. But it seems like follow the leader a little bit, and I've seen a lot of them bashing Bitcoin as well. They've gone sort of doubling down. I won't name names, but yeah, I mean, fundamentally, I'm a Bitcoiner. I am interested in DeFi and some of the stuff it can do there. I do think that's interesting in shaping or shaking up the traditional system. But I mean, the point that I was really wanting to make here is, so this chart firstly is
right. I honestly, I really can't explain that uptick in alts. Well, like I don't get it. That last one, the very last one.
Well, the last time we saw that was here at the 2017 top. So I am familiar with it. We have seen that before.
No, not that one, not that one. Like the uptick in the last like 2 months. So it's more like, the last one, last 2 months. So it's more like, no, not there. Like all the way on the right. No, all the way on the right. This uptick, yeah. Like I cannot explain that uptick because like we're really at the lows now in Bitcoin.
Yeah, I mean, there is a little bit of speculation going on with Ethereum. Ethereum hasn't been doing spectacularly well, but it has got its upgrades going on this month, and I do think that there is quite a lot of interest from big players in DeFi, which has had quite a good bounce recently. So yeah, I mean, they did get sold off pretty hard, so they've sold off. I mean,
right, because of the hard sell-off, I can understand the bounce back in, May of last year. Was it? No, sorry, May of this year. This is a one-day chart. I can kind of, see the bounce in May because of the hard sell-off, but the one that's happening now is a little baffling.
Well, sometimes alts can be a leading indicator and tell you where Bitcoin's going to go. And sometimes it can fool the market and it can draw in people lull people into a false sense of security. And then the real idea is to stop people is to provide liquidity for people to dump the Bitcoin. So that's how I sort of see it. Like sideways in accumulation and up it can be either or. I do think that if alts were like to break massively to the upside here and Bitcoin was to go with it a little bit and we saw like money flowing in, that's kind of what I expect to see happen next if it is reaccumulation, because alts have got a lot lower market cap, so it's a lot more difficult to hide what you're trying to do, whereas with Bitcoin there's all sorts of different ways you can kind of get yourself into the market, and with liquidity being there without much problem. But in the alts, that's not the same thing. So this overshoot is basically, my point is that since Bitcoin we trended kind of there or thereabouts together all the way up, and then Bitcoin just went sideways and down, whereas the alts went massively up. And they are actually still way above where Bitcoin was when we were sort of like 60K. So, like, if Bitcoin recovers from here, well, massive upside on the alts potentially. If Bitcoin dumps from here,
and that is so dangerous. I mean, this was one of my fears going into this bull market, is that if this is like, we're going back to our discussions from last year, going into this bull market of 2021, because the price started rallying in Q3, Q4 of last year. My fear was that if Bitcoin doesn't separate from the alts on the way up, we were facing another 80% plus correction. Like Bitcoin will not be able to stabilize near the top. And this happened in this first mini bear. And now, if Bitcoin and alts both rise again, I am going to be looking for another 80 to 85% correction. But if Bitcoin is able to finally have exit velocity against the shitcoins, then I would no longer be expecting an 80, 90% Bitcoin corrections.
Sure. I mean, I've listened to you for a long time, Tone, and I know you've been consistent with that throughout. So fair play to you with that. I think that a lot of this money that came in, it was all off the back of DeFi and a lot of the other projects, like smaller cap projects. So I think in a bull market, you would expect low caps to kind of run away a little bit quicker, even if it's shit stuff, some of it at least. And yeah, in a bear market, it's going to come down harder. So yeah, this is just pure speculation froth on top of what you might say Bitcoin's slightly speculative itself. So this is just major risk up here. And the only watch out is that it looks extraordinarily like it did in 2017, which was kind of the final hurrah of that cycle for the alts, which kept going. You know, Ethereum just kept on going after Bitcoin. So it is just something else to be aware of. And like, you know, if you look at dominance here, dominance in 2017, that's where it peaked, and it was, you know, not hugely dissimilar this time around as well. I mean, if Bitcoin does have this correction lower, I'm 100% on my view that like the alts are going to get absolutely smashed, like twice as bad as Bitcoin would.
Yeah,
so,
that's the only like real bright side in Bitcoin falling down to 20K or lower, is that the shitcoiners are really going to cry.
Yeah, there will be some tears there, and they certainly haven't given up. A lot of those shitcoins are still being held. You know, otherwise we would have seen that correction come lower. So there's a lot of new bag holders who are expecting this to go back up. So if we do need to do that kind of Wyckoff spring, which is to draw in that supply, then you know the capitulation is just going to be way worse on the alts side of things. So for me, you know, there's an argument to be spot long in Bitcoin because it could be reaccumulation. We're relatively close to the bottom of the range, so somewhat low risk if you know how to manage your risk, you know, on lower time frames. So there's that. there's an argument of being dollars on your trading position, which is largely what I am. Because I'm not in a hurry. If the market's going to go up to hundreds of thousands from here, then I'm happy to sort of take my time and I'll jump on board when it's a little bit more obvious. And then if it capitulates, then I'm there, ready to buy. I'm ready to be the spring, basically. So for me, it's quite clear. But if you kind of like, clutching on to hope, then good luck to you, because that's not a strategy in investing and trading, really. So
I should be more in cash, but I am more weighted towards Bitcoin, and that's because I got caught in GBTC, and how quickly that premium went so negative, which I didn't anticipate. What are your thoughts on the whole grayscale Bitcoin in the trust versus GBTC dynamic? How much do you pay attention to that? Because in Q3 and Q4 of last year, Grayscale was buying up twice as much Bitcoin daily as it was being mined. And as of like January, February of this year, they've bought 0 Bitcoin because that premium went negative on those exits. You have another lockup period ending, and people are always asking what's going to happen. And my view is no one's going to sell off that lockup because the premium's negative.
Yeah, I mean, it's something that I pay attention to. I don't trade it, but a lot of the people who I'm in groups with talk about it, a lot. And their view is that this lockup or unlocking is likely to be bearish on the basis of all of the previous other unlocks. And I think Willy Woo was saying as well that there's less incentive to buy the spot to put in to take advantage of the premium when you can just buy the shares themselves.
I'm on the other side of that. I'm on the other side of that statement. Now, the lockup ending does open the possibility for those people to sell their Bitcoin. But I don't see why they would, because if they sell the Bitcoin, they're selling it at a negative premium. So it's not like they're going to sell the Bitcoin on GBTC and buy that Bitcoin in their cold storage. It's like literally selling your house and buying it back at a higher price. Like, it just makes no sense. So they might as well just hold until that premium trends towards 0 before considering the sale. And the price of Bitcoin has already crashed 50% in the last 6 months while they were locked up. So, I mean, if they needed that money, they have found it in other ways. And now they can just hold on to it, waiting for the recovery back to 65K. And meantime, Grayscale hasn't bought any new Bitcoin into the trust in the last 6 months. So this is like the last lockup that there is. And there will not even be a lockup pending in the near future. So to me, this is all bullish, not necessarily bearish.
Yeah, I must admit I haven't actually given it that much thought, but I guess the contrary to your argument there might be that when they actually enter the GBTC trade, they will already have hedged the sell side of it. So the incentive might not work the way you're describing it. It depends on how the individual wants to play the premium, either hedged or unhedged, I guess.
All right. Anything else you want to say? Otherwise, I will just fire off some probability and percentage questions of where Bitcoin price is going.
No, I think I've pretty much covered it. Been going about an hour or so, haven't we? So I don't want to bore people to death with too much of this stuff.
All right, so let's do this, right? Like, so I agree that anyone that thinks this is a Wyckoff consolidation at the bottom, ready to go up, the Wyckoff chart, no matter whether it's version A or version B, pretty much gets negated if the price drops from here to below 30. We agree on that?
Yeah.
Okay. So first question. What is your probabilistic chance, like on a scale of 0% to 100%, that price will go below last month's swing low?
Ooh, I don't like these games because it always means that we have someone who's going to counter trade it and make it go the other way. But
Well, they can, but like my percentage is like 55%, right? I mean, if you're gonna counter like for me to take on a trade, I need probably a 60-70% thinking that I'm right. Like I'm not gonna act on a trade if I think there's a 55% chance that I'm right. So for me, it's about 55% that we're gonna swing below June swing low.
I think it's slightly higher personally than that. All things considered, yeah. I think maybe it's like 65.
Okay. Okay, good answer. Now what if we okay, so here's my other view. My view is that if we do go below 28K, we're gonna rapidly swing down to the 25K or below area, and then very quickly bounce back above 30, similar to what happened during the COVID crash. What are your thoughts on that outcome and the potential probability of that outcome?
Is that if the 65% occurs, yeah? So we have to times
Correct.
that by the next probability to get the
Correct.
probability. I would say that the chances of it bouncing back up to 30 quite quickly are, if it does go as low as that, I would imagine as being around about 75-80%. I mean 80%. Certainly
Yeah.
very high. I mean, I don't know if it's going to bounce back into the range above 30 and off we go up to 70K, you know. I think it's more likely to sort of tap back up at 30. I mean, I'd be extremely surprised if it doesn't bounce between 20 and 30, at least.
Right. So the point is that while I am kind of waiting for that $25,000 area to buy the dip, I understand that if that happens on over the weekend, I will never get the chance if I'm trading GBTC. Like it's gonna happen that quickly.
Yes, agree.
That's my view on that. Okay. So now here comes the big one. I still think there is a slightly greater than 50% chance that we end the year at approximately 100K or above. So here's what I mean by approximately 100K or above. If the price of Bitcoin is rising, let's say we're entering November with a price of Bitcoin of 45,000, and then we're exiting December with a price of Bitcoin of 90,000. So we've gone from 45,000 to 90,000, and early January we break 100K. To me, that is good enough to be right on Bitcoin is going to close the year above 100K. Like it's the end of year momentum. So I'm still with a greater percent chance that we close the year with momentum to break 100K either right before the year's end or very soon after. Your view?
I'd say that obviously the odds of that happening have decreased versus when we were on the way up. But you know, as we looked, you know, we overextended too soon. We're back to where we are, maybe because of the big overextension, and then you know the fact that it's going to take a little bit of time to work our way back up, if that's where we go. Then perhaps the cycle just ends up being a little bit longer this time. So I don't know if we would complete it by the end of the year, but I certainly think the odds are that we would make it there early into next year. So maybe the time frame and the question doesn't quite add up for me. But I still think, oh, you put me on the spot here. This is tough. I haven't thought that far ahead, if truth be told. I'm trying to deal with
Yeah,
what
you
happens.
really want to be able, you really want to call a bottom before you start calling upper price targets. But I am so confident that my statement earlier this year that the price of Bitcoin will bottom this summer. I'm very confident in that statement. And it's ironic how the official start of summer was the day of the 28,000 swing low. Now, I would have rather have the price of Bitcoin bottom, say, in July than on the first day of summer. But because I am so confident in my statement that Bitcoin price will bottom this summer, I'm fairly confident we're going to start to rise fairly quickly. But to counter the other one, had Bitcoin continued to rise past the $65,000 in April, and we would have been hitting, say, 85,000 going into June, I probably would have said we're not going to be above 100,000 at end of year because a correction was going to be coming. And the later in the year that correction would have started, the less likely we would reverse and break the prior swing high.
Sure. I mean, to get over 100K, it's a 3x for here, and Bitcoin does that for breakfast, you know. So, you know, the odds of Bitcoin going up 3x is high, particularly within where we are in the market. So I would say that there is still a good probability, but it really depends what happens next. You know, if we dump through this thing from 30 through to 20 and then bounce up to 30, get rejected, and can't reclaim the 30 range, then like we're smoked as far as I'm concerned, you know, like, you know, it's going to be another big triangle between 20 and 30 and we're done for another 4 years or whatever. But, you know, if we get a big spring, reclaim the range, you know, if you ask me that question, I'd be like, you know, 65, 70 to 80% that we will finish the year, and I'll certainly be looking for longs. I just think that, and I know it's terrible, like, to not have the conviction to know exactly which way it's going in the particular short term, but we're really about to find out what's about to happen here, you know. Break this trend to the downside and we'll know. Bounce off lower and then reclaim the range, and then we'll know. You know, it's literally about to happen anytime soon. So I don't want to, as you say, it's probably prudent for me to have strong opinions loosely held. Is probably the way to think at the minute.
All right, and final question. I still, as I've again stated months and months ago, I envision the current bull run having similarity with the 2013 bull run of this double exponential peak, one significantly higher than the other, versus the 2017 or the 2011 bull runs of a single large peak. So far, I think it's playing out exactly like that. Your thoughts on that?
I think that's the only narrative that you can possibly have at this point, for it to continue higher, because it's like the double bubble thing. So yeah, I mean, if we are to do that, I think that it's perfectly reasonable with what's going on with the current price action. It's very similar to what happened in 2013. There's a little bit of a difference in liquidity these days. You know, between now and 2013, it would have been very easy to get the price up there. But a lot of the participants have still got the same thought process. So, yeah, I mean, you know, if we can get above this range, then absolutely, I think it'll be on to higher highs. It's kind of same as the 100K question, really.
All right, so we'll get you out of here on, I guess, showing your website. And this is where I got to give a little bit of a disclaimer. I mean, I treat people like adults. You guys, I try to bring on, you know, honest traders on the show. I know there's been some mishaps in the past. And my motto is I teach people, you know, technical analysis and risk management. And I strongly encourage people to come up with their own trading strategies, their own indicators, and make their own decisions from start to finish. But I also understand that when I started out trading, I was following other traders as well until I had enough confidence to just do everything completely myself. And filbfilb, you yourself, about a year ago, launched a website, so you can go ahead and pull that up. And the link to it is in my video description. And this is a subscription-based model for people to join. I currently don't have one of those, but some traders that I do bring on the show do. So go ahead and tell the people a little bit about what it is.
Okay, so we actually started running Decent Trader like maybe as much as 2 years ago. So I originally started writing a newsletter, which was, you know, really well received.
Time flies, man. Time flies.
Absolutely, yeah. So I started writing a newsletter, developing the brand and so on. And, you know, having been in the space for such a long time, you know, you pick up tools yourself, which obviously I'm trying to work out where the market's going. Both on chain and also, you know, looking at price action and price trends and that sort of stuff. So over time, I was building my own indicators and obviously getting a good grasp of what was going on here. And a lot of people were all asking the same thing. Can you help us to help learn how to trade? Can you help us get your indicators? And can you help us with the on-chain stuff, which you're writing about in the newsletter? And if you sort of put that all together, that's kind of what Decent Trader is. So it's not just me. There's also Philip Swift as well, who he actually invented the Pi Cycle top, which I should have mentioned earlier on. So Philip,
I mean, look, I'll admit I was certainly skeptical on the cycle top, but it sure as hell did a good job calling that top. And just like with Elliott waves and with WYCKOFF, my general complaint is that they're very backwards looking and they alter backwards history. My biggest, I guess, issue with the cycle top and other similar indicators, the same thing I told Willie about the minor difficulty ribbon. I'm not a huge fan of indicators that only show you one side. Like the Pi cycle top only shows you the top, but it does nothing to help you get back in. It's just like I'm looking at the minor difficulty ribbon, and it kind of tells you when to get in, and it never tells you when to get out. So I'm always like hesitant to, pay too much attention to those kinds of trading metrics. Maybe it's a tone-based problem, because and the other now that the Pi cycle has 3 points instead of just 2 points prior, it's going to be interesting looking at it the next time.
Sure. I mean, it came at the same time as the Coinbase IPO, but like also I'm just showing on here, this is one of my other indicators, which is we call it the Predator indicator, which you can get on the site. And these two were, pretty much bang on at the top. And I agree, like obviously it's nice to have a re-entry point from an indicator, but that's why we've got all of the other on-chain stuff and these kind of tools to get us back in. So I think by definition that is just for the top as opposed to Pi Cycle bottom. I don't know, maybe he's got his other investor toolkit stuff on the site, so that helps try and pick the bottoms. So we've kind of we're trying to cater for all of it, and as you say, the perfect indicator which calls the absolute top and bottoms is somewhat difficult to come across. Through cycles at least anyway. So so we're pretty happy with our indicators, on the side. I've created a new one as well. I forgot to mention it before, called Moonraker, which is effectively like a mean reversion strategy. So there's those, and I mean, like there's various other things like, we've got a scanner on there which reads the market every 4 hours, assesses it, scores it, and then comes back and tells you the probability of the market going up by a certain percentage. So all of that stuff's on there. We've got the basic membership, which is like $1 a day, where you join the Discord and you'll just hear me and Phil giving our views as we go, through to like the all singing and all dancing stuff. So there's something for everyone on there really. But yeah, so that's Decent Trader, and hopefully you found some of this analysis interesting, because it's been good going through it. It's good to have a good review of what's going on.
All right, cool. All right, let me steal the screen share for a second. And I'm gonna jump back on here. Yeah, guys, so the link to that is in my video description. The stock market has started trading, and ignore this candle because this is the futures trading yesterday, but the cash market was not trading yesterday. So I hate the fact that this candle's there. And as I've said in yesterday's stream, that I would completely ignore it. And the MRI, which is my indicator, called the top pretty well in the S&P so far. We'll see what happens by end of day. So just wanted to point that out. On my stuff, those that are interested in the MRI or basic free education is here. MRI is here. I just launched private Q&A. I haven't done any this week, but I will, I promise, probably maybe tomorrow, because I don't think I'll be able to do it today. And this is where people just join me and ask their questions following the live streams in the private Zoom sessions. The financial summit is coming to Dubai I will try to get filbfilb to come to one of these financial summits. I think with the whole COVID situation and him living where he is, maybe a little tough to get to Dubai, but you never know. Still plenty of time if he can get out. Would love to get him out to one of these, maybe an upcoming Bali or other parts of the world. All right, that is pretty much it. You guys got my views on the price early on in the show, so you can go ahead and rewind that. And on that note, we can go ahead and close out. Any final thoughts, Phil?
Yeah, just time to pay attention, really. It's okay to not know which way it's going to go, and to follow the market. That's where I am. So yeah, looking out for the opportunity which is coming. If we go lower, opportunity to buy more Bitcoin. We go higher, we're going to go over 100k. So all good. Thanks for having me on, Tone.
Hey, thanks again for joining. Hey, everyone. Thank you for hanging out, and I will see you all on